The US is racing to control energy prices as the room for error shrinks. As the war in Iran enters its 7th day, the world's energy supplies hang in the balance. Oil is heading for its biggest weekly jump since 2022 as disruption ripples across markets. Meanwhile, President Trump has signalled imminent action to reduce pressure at the pump. But can anything stop the surge? Well, Naveen Das is senior oil analyst at Kpler. So, Naveen, Trump appears reluctant to tap the strategic petroleum reserve, but even a modest release could send a signal to calm markets. Why the hesitations and why would it actually make a difference?
Maybe a bit of a calculus in terms of how long this conflict and the energy disruption might go on. I think potentially there is a view that if this extends a bit further, it's a card that he can play maybe later on, closer to the midterms, which might have a bigger effect. And I also think this administration is quite, revenue based, and I think they are exploring this potential for a virtual reserve to almost trade their way, out of it in a certain sense, trade their way into sort of locking in and securing lower prices for their consumer.
So with that in mind, what other tools does Washington realistically have at hand now to ease pressure?
Two of the main metrics they've used so far is, issuing India a 30-day waiver to purchase Russian crude oil that's on the water so far to help, alleviate some of the demand pressure globally. Secondly, as I stated before, they're exploring this option of this virtual reserve. So essentially trying to sell essentially futures, ICE Brent futures that we believe, both in the prompt and potentially in the middle of the curve to try and short the market and hold it maybe longer term to lock in some of that revenue and then obviously transfer that to create a sort of price floor for the consumer. So these are, two, I guess, maybe more novel ways they've tried.
Well, commercial traffic through the Strait of Hormuz has nearly ground to a halt, and Goldman Sachs says that there is little confidence that US security measures alone would restore those flows. So what would it take for tankers to take the risk?
Our view here at Kpler is that the risks are so great right now that the passage through the strait is probably going to be linked directly with how long this conflict lasts and when we see de-escalation. Potentially, there's a bit of optimism saying that flows can be restored with US escorts. But all in all, I think the scale of the disruption is so massive and the risks are so great, be it to assets, but also to life, that we think that the disruption will kind of go hand in hand with how long this conflict lasts.
Well, this morning, Qatar's energy minister warned a wider war could bring down the economies of the world, predicting as well that Gulf producers could shut down within weeks. Is that a realistic worst-case scenario?
We've already seen Iraq shut down, we believe, about 1.5 million barrels per day. So that's about a third of their, daily oil production as a result of maxing out on storage capacity and the inability to export their crude oil. Kpler calculations suggest that other producing nations in the region that rely on the Strait of Hormuz are, facing a similar reality. Perhaps not now, not as critical as it is for Iraq, but, we're looking at the time span of maybe 2.5 to 3 weeks. Saudi Arabia has a bit more flexibility, the ability to move oil via pipeline from the east to the west with their east-west pipeline, and to take advantage of really massive storage capacity they also have. But all in all, it can become quite critical to the producers from in that region. And, if we see this conflict go into the sort of 2.5, 3 week timeline, which President Trump has intimated, could be the case, we will see a severe production crunch.
So finally, Naveen, let's look closer at that timeline. Some analysts say if disruptions last 5 weeks, Brent could climb above $100 a barrel. So what's your outlook for prices from here?
It's difficult to say, that we'll get to 100 or breach 100 in the next few weeks. A lot of it hinges on, Iran's ballistic missile and drone capabilities. How quickly are these getting exhausted? And, how quickly can we find an off-ramp or a de-escalation to this? But it's hard to give a precise number, but in a 4 to 5 week horizon, with the level of production shutdowns we'll see, prices would creep towards that level. It just depends on the tools, global economies use to sort of cool oil prices.
That was Naveen Das from Kpler. Don't forget, you can watch more videos on Reuters.com.